All right. So this is a different time than we usually do these calls. We usually do the swing trading call at 11:30 on Fridays. So we wanted to give this a try, but we also had such a big request on Kerry's call last Friday about going a little bit more in depth on Bitcoin because it has become really a headline news thing recently. It broke over 100K a couple weeks ago, and more and more companies are adopting. I know, Mark, you posted on the Discord about Microsoft actually voted it down. I believe if I read that right.
Yep.
But you're now seeing states and countries, and even here in the United States, we'll probably see our federal government adopt Bitcoin to some level. That is to be seen, but I think with the popularity of it, understanding what it is and how it actually can help smooth out the ride when it comes to your long-term investing is really important. So what we wanted to do was Mark's going to lead off and go into a slide presentation he's been working on for about 10 years, isn't it? I mean, you've been original hodler, but you've been building this slide presentation. And then we're going to get into how Bitcoin originates and a couple other things. And we'll go there and then we'll open it up for Q&A and just go from there. So, Mark, I turn it over to you.
Okay. Well, if everyone could kind of mute yourselves, we're getting some feedback from somewhere. If you could put your Zoom
Got
on
it.
mute, there we go. And then if you
Yep.
want to talk, just take it off and start talking. So, um, thanks for coming. And I saw when Trent put it out, the notice. He said I was experts, and I'm not an expert in Bitcoin at all. I don't know too many people that are, other than some of the really maximalist and younger kids that got in it early. I think I heard about Bitcoin back in probably 2015, and I had the same reaction that most people have when the first time they hear about it. And and none of what I say is financial advice. I'm just going to go over my thoughts of and what I think it is. And you can ask 100 different people to explain what Bitcoin is, and you'll probably get 100 different answers. Okay, but it all goes back to the same principles of what it is. And so I'm going to go over what it is for me. And then I'm going to show you some slides. The guy that got me into it that I started watching was Michael Saylor, and he's the CEO of MicroStrategy, and he's the one that has put all his treasury in his company into Bitcoin. His company now owns 429,000 Bitcoin. He owns over 2% of the supply now. Um, he intends to keep buying more Bitcoin. He does convertible bonds, and you can go and there's plenty of stuff on YouTube. He explains exactly what he's doing, and got experts, explaining what he's doing, and you got both sides. This is a mess, it's a wreck, or this is brilliant. You've got a lot of other companies, like Trent said, putting it in their treasuries, and you can see the results on his stock over the years. Basically, he came down to the point of he had 500 million in his treasury. It was during COVID, and he figured out that with nominal or monetary inflation and consumer inflation, he was losing money, and within 5 years, his 500 million was really be uh, debased to really nothing. So he had to come up with something, and he got into Bitcoin, and then he started looking at it, uh, and I started watching it, and I started getting into it about 2020, about the same time he did. So, okay. So Bitcoin to me is a form of digital capital, and it's a store of value. Okay. So traditional capital, as opposed to digital capital, traditional capital refers to physical assets that can be used to generate wealth. This includes tangible assets, like you talk about physical assets, land, buildings, precious metals, machinery, paintings, vintage rare cars, equipment, things you can touch and own, and, beachfront property. And then you have financial assets, which are stocks, bond, cash, um, gold, silver, those types of commodities. You can own oil, you can own grain, wheat, soybeans. And people use this not only as as capital, but they use it as a store of value. You buy land hoping that it appreciates. You buy a house hoping that it appreciates, and at the end, when you're ready to sell it, you have value stored in that particular asset. Same with paintings. You got a Van Gogh. You know, you're hoping that since they're so rare, when you buy it for $8 billion, that it'll be $10 billion when you decide to sell it. So this is how we as individuals or families, companies traditionally build and stored our value. Okay. But digital capital is now kind of a newer concept when it comes to Bitcoin. I'm only going to talk about Bitcoin. You can talk about cryptocurrencies are and altcoins, and they call them shit coins, and all the others that are out there. You know, all have trading volumes and and functionality. But I'm just going to talk about Bitcoin at this point because I see it as a true store of value for me, as opposed to a security that the U.S. SEC uh, has deemed Bitcoin as a commodity. So it's the same as a gold or a silver, oil, wheat, corn. So digital capital is a newer concept that encompasses intangible assets created and used in the digital realm. So for me, it's digital capital. Bitcoin advocates believe that Bitcoin is a superior form of capital compared to traditional assets like gold or fiat currencies. This is primarily based on Bitcoin's unique properties, and these are the properties that are pretty standard. Scarcity, Bitcoin's limited supply and its existence as a digital asset make it a potent store of value. There's only 21 million Bitcoin out there. Okay, I think 19 million have been mined or out in the market right now. Is that true, Trent? And we got about a million whatever left
Yes.
to.
We have 19,900,606 or 94, roughly 95% of the available Bitcoin is available, and we have 1,098,393 left to be mined.
Right.
And
So
and
I think
presently
go ahead.
presently there's only 450 being mined per day right now.
And we're going to go into mining after we go through some slides here. And Trent was a miner, so he knows a lot about mining, and he'll be able to answer questions about that. So there's only 21 million. They've estimated maybe 5 million have been lost the keys. Someone died, didn't leave the keys. One guy in England, his girlfriend threw away his hard drive and it's in the trash somewhere, and he's trying to get permission to go dig through the dump, and they're not letting him do it. So it's scarce, but it's valuable. Security is another unique property. The blockchain technology ensures the security and immutability of Bitcoin transactions, and Trent will talk about that a little later. Global accessibility. Bitcoin can be accessed by anyone with an internet connection, regardless of geographic location. Resilience. It's not subject to the same vulnerabilities as traditional financial systems, such as inflation and government intervention at the time. Bitcoin is a decentralized digital currency. It operates on a technology called blockchain, which is a distributed ledger that records transactions across many computers. This technology ensures security and transparency. So if you want to, you can go get a node and become a part of the blockchain, and nodes and the equipment is about $100. You log into the software and you learn it, and you can see all the transactions that go. You don't see who is doing what. You can see all the transactions, and you're a part of the system, and your computer then begins part of the verification process and the security process. So by viewing Bitcoin as a digital capital, advocates encourage individuals and institutions to consider it as a long-term investment and a hedge against inflation and economic uncertainty. So I'm going to further explain this. I'm going to utilize some of the slides from Michael Saylor that he's been out there, and he's got a lot of presentations. He just presented, 45 slides in 3 minutes to Microsoft, and their board recommended against it, which didn't surprise me because that's the way their board is. But anyway, so I had some of his slides are really good, and that's what got me involved and interested in thinking differently. But before I go to the slides, I wanted to kind of go over a couple of concepts, and what it is why would you need Bitcoin? And it comes down to this for me. When I looked at fiat currency, it's being debased, okay, and it's being inflated away. And if you go back 100 years, you can see that, we've pretty much fiat currency of the US dollar has gone down to almost nothing now. Okay. So you're buying less, with less cash. And so there's two things that are causing this. One's monetary inflation. And monetary inflation refers to the increase in the money supply within an economy. This can occur when a central bank prints more money or when commercial banks create credit through lending. When the money supply grows faster than the economy's capacity to produce goods and services, it can lead to a decline in purchasing power of money. Well, over the last 4 or 5 years since COVID, we've been really, everyone knows, Treasury Department's been putting out Treasury bills left and right. Money has gone through the roof as far as supply of money. And every time that they do that, they debase your money, just like a stock. If you own 100 shares of stock and there's only 1,000 shares out there, you own a tenth of the company. If they decide to go out and double the amount that's offered to 2,000, now you own 5% of the company. It debases you. And that's what's happening to our currency when the Treasury Department goes out there and prints more money. The second part is consumer inflation, and we all know about that. We've been experiencing it. It's been up 20-some% in the last 4 years. It's also known as price inflation. It measures the rate at which the price of goods and services increase over time. It's calculated by tracking the changes in a basket of consumer goods and services such as food, housing, transportation, and healthcare. And we've gone over that ad nauseum on all of our Platinum Zoom calls. So if you're familiar with that, you should be if you've hung around our Zoom calls before. So the relationship between the two, monetary inflation often precedes consumer inflation. When there's an increase in the money supply, there's more money chasing the same amount of goods and services, and that leads to higher prices. That's just a standard definition in economics. This in turn is reducing the purchasing power of consumers. So with that, I'm going to run you through a couple charts that help me understand what's going on. And the first one, let me get it up here. The first one is where did Bitcoin come from? And it came from this 9-page white paper that was developed and written and dispersed in 2009, I believe, and by a person, a team, a guy, a gal, we don't know, named Satoshi Nakamoto. And he has a 9-page abstract that tells why he wanted to invent Bitcoin. It's really a purely peer-to-peer version of electronic cash that would allow online payments to be sent directly from one party to another without going through a financial institution. So this came right after the financial crisis and the banks went down and people couldn't get their money. And so through his thought process, this came out in 2009. And you can go and you can Google this and it will, you can read through it and see it's only 9 pages. Just about anyone who invests in Bitcoin should probably go and take a look at it. So, oops. This is a chart that Michael Saylor uses in a lot of his presentations, and he goes back 14 years and he shows annualized return by an asset class. Okay, and he's put in what consumer inflation is. He goes about 2 to 3%, and monetary inflation over the last 14 years, which is about 13%. Okay, a little over 13%. And if you look at all the asset classes from commodities, cash, emerging market stocks, total bond market, inflation protective, gold here, these are your returns, okay? Over 14 years, convertible bonds, small caps, US value. You can see that the only two that have made more than monetary and consumer inflation are really US growth stocks and the NASDAQ 100. So effectively, if you weren't making at least 13%, here in the S&P, you're breaking even. Your money, you're actually losing money over time because of lack of purchasing power. So this is where he puts in over 14 years, and he just put in the last 4 years of Bitcoin, and this has actually been the worst 4 years for Bitcoin when you look at a percentage gain wise. Bitcoin had hit 60%. You can see, here's our regular asset classes we just looked at. And when he was looking at trying to save his company and the treasury is $500 million, he was like, well, why am I going to break even when I can get into an asset class such as Bitcoin and I can make on average 60% a year? And this is when he started 4 years ago acquiring Bitcoin. So that's one reason why, he uses this monetary inflation, consumer inflation to say, if you got your statement this year and it said you made 12% and you think 12% is good, come back and think of this chart and say, was it really good? Did I really get ahead when you think about inflation and purchasing power? So over the last 4 years, these are the annualized asset performance chart for 4 years. You see, if you're in bonds, -5%, if you're in gold, 6%, real estate 10, S&P 500 15, Magnificent 7 29, and Bitcoin was 60. And this is performance since August 10th, 2020, when Microsoft adapted its Bitcoin strategy, and the source is FactSet. So if you go back over the past 14 years, 11 out of the past 14 years, Bitcoin was the biggest returner of, of capital to the owners. And you can see going back to 2011, 1,319%, 217, 26%, 5,500%, then REITs in 2014, then Bitcoin 33.74%, 15, 123%, 1,400%. And of course, 18, we have bonds, 19, 93%, 308%, 2020, 57.25%. And then we got into the COVID, so commodities, 21.23%, and then 156%, and year to date, 45.6% for Bitcoin. So 11 out of the last 14 years, it was the top performing asset class. If you go to number 2, you had gold, emerging markets, US equities, REITs, commodities, emerging markets, gold, US equities, gold, US equities. So US equities is there quite a bit, but Bitcoin was the highest returning. Now, if you look at the 3 years it wasn't, it was pretty low. I mean, this pretty volatile. So in 2014, it lost 57%. In 2018, it lost 74%. Okay, and in 2022, it lost 63%. So 3 down years, but the up years really are quite impressive over the last 14 years.
Hey, Mark, can you go
Yeah,
back to that real quick?
I certainly can. I think. There we go.
Yep. So when I was in the financial planning industry, one of the first things you pulled out when I initially got in the business was this quilt chart. What it did include was Bitcoin. And the reason we pulled it out was to emphasize diversification. Why? That if one asset class does well one year, oftentimes you see this rotation happening and creating this balance. And one of the things I concerns me at times about Bitcoin is it's so popular. And if you look at those returns, they're just insane. And you can get caught up into this, into the idea of I own 100% of Bitcoin. That's all I'm investing in. And I think what this chart really pushes and emphasizes for me is the risk management and diversification, because you can have a year in Bitcoin where you are down 70, almost 75% or 58%. And so coupling this with your long-term portfolio, and I think it's even more of a reason why to look at Bitcoin as a long-term investment versus a traded or short-term traded investment. And I think this chart really emphasizes that you can create a balance in your portfolio and hedge out bad years in other asset classes, but also get over that monetary inflation rate by utilizing Bitcoin as an asset to help boost those returns. So go ahead, Mark.
Yeah, that's important to note. I mean, I looked at this and I'm like, you know, why wouldn't you include this as a part of your portfolio? Me personally, I'm talking to myself, because look at the returns. And like Trent just said, on the bad years, they're bad, but you know, I don't own only Bitcoin. I'm not a maximalist. but it is a percent of my portfolio. And this isn't financial advice. And you each have to look at what it means to you and study it and understand it so you can explain it to the most of your ability, to the point that you understand it enough that when your wife asks, or your boyfriend or your husband or your parents or who your friends, and while you're drinking beer, you can explain it, and they can stop laughing at you, which they used to do at me. And now they call me and ask me, hey, can you help me buy a couple Satoshis?
It's the
So
conversation I had with my wife this morning about
yeah,
why is Bitcoin up to where it is, and how is it working into the our system, our economic system.
yeah.
So
So I look at this, and Bitcoin is a very small percentage of the total dollar value of global assets out there. And that's what this chart shows. So the global wealth is distributed across a variety of assets. Equities is only 115 trillion. The things that we swing trade, the things we talk about it, in best of us investors. But when you look at real estate, is 330 trillion. Bonds is 300 trillion. Just money market itself is 120 trillion. Cars 6 trillion. Art 18 trillion. Gold 16 trillion. Bitcoin is at 1.8 trillion. This little box right here. So if you just would go to, I mean, we're at 2 trillion. If you just double or get to 10 trillion, just think of how much that asset that there's only 21 million of them would go to. I mean, there's real estate everywhere, okay, and everyone will say there's only a certain amount of real estate, but if you've flown over the country, there's a lot of real estate with nothing on it. Bonds, the largest, uh, bonds is debt. Our whole society, our whole economic system is based on bonds and debt. Money, okay, money's around, but money's devaluing. Equities, unless you're in the right, the Mag 7, they're devaluing, but there's $115 trillion in that. So this is what I'm looking at here, is if this grows, what's that going to do to the percent of my portfolio that I have in it? Another thing that's causing, let's just look at the growth. What's causing Bitcoin to grow so much in the last 9 years, but especially here, we hit 100,000, a week or so ago. When you look at the ETFs that were launched in 2024, 12 out of the top 20 ETFs launched are related to Bitcoin, Ethereum, or MicroStrategy. So here's IBIT. Okay, that's the BlackRock. Year to date, this is even higher now, 27. What is that, billion? Okay, here's Fidelity's ETF. Here's Kathy Wood's ETF for Bitcoin. Here's a BITB Bitcoin. Here's the HODL. That's Van Eck. ProShares Bitcoin. These are Grayscale. These are MicroStrategies. Here's Ethereum. So a lot of money has been pushed into these, and they just came out last January or February. Full disclosure, I own IBIT. I bought it when it first came out, and I bought it for my retirement accounts because I wanted a percent of my retirement accounts in Bitcoin, and you can't, as far as I know, and at least my Fidelity, I can't own it in a retirement account as a raw commodity, just Bitcoin. So I bought this iShares for that. Why else are we seeing the growth? Well, Bitcoin is now the 7th largest asset by market cap. It's the most recognized, widely held, interesting, compelling investment asset in the world. We just, in Bitcoin, surpassed the value of Saudi Aramco at 1.79 trillion. We're at 1.83 trillion and growing. We're right behind Google at 2.2, and 2.2 at Amazon, 3.1 at Microsoft. Apple's 3.4 and Nvidia's 3.6. So this has been coming for the last several years up the ladder, and we just passed Saudi Aramco and passed Silver and passed Meta, and we'll see if we catch Alphabet or Google and Amazon. But more and more assets are now accepting Bitcoin as a legitimate asset class based on ETFs and the other things we're talking about, and you're starting to see it grow and more money go into it. Of course, when you have returns like we're seeing, that's going to attract assets. So if you look at BlackRock's Bitcoin ETF, the IBIT, it's now surpassed their gold ETF as far as money in that ETF. And this is the fastest growing ETF, this IBIT, in the history of ETFs. It hasn't even been around a year yet, and it's already surpassed their gold one that's been around forever, IAU. This is IBIT. So when you look at ETFs, total ETFs, Bitcoin ETFs are outperforming bond ETFs and beginning to gain place in the standard 60-40 investment portfolio. You're seeing some advisors moving 1 to 3% allocation into these ETFs from Bitcoin ETFs, and they believe they'll move up to 10 to 20% allocation in the future. You can see year-to-date returns. Returns gather assets, and when you look at this and you're a fund manager, you're like, okay, where am I going to? Why wouldn't I put 1 or 2 or 5% into this where I'm seeing it? And be careful. It's a part of your investment strategy. So not only are they in ETFs, we're seeing growth in a lot of different entities that hold Bitcoin. Here's our ETFs. Okay. Countries are holding Bitcoin. Private companies like MicroStrategy, like Square, okay, like Mara are holding ETFs or holding Bitcoin, raw Bitcoin. Public companies, ex-miners, well, private companies, sorry. This public companies would be Meta, or Meta owns some. MicroStrategy would be here, but private companies own Bitcoin. Mining companies, the companies that mine it, they own Bitcoin. They keep it. They sell Bitcoin to pay their expenses, and they try to keep the rest. So you can see that we're seeing growth not only just in equities, but in companies and private people in mining. Institutions are buying Bitcoin ever since the ETFs came out. We're seeing that now there's a product out there that they can buy. It's becoming more standard. It's becoming we have futures on the ETFs, and we have options now. Pension funds, sovereign wealth funds, endowment funds are buying Bitcoin, which increases the amount of demand that we're seeing. Bitcoin ETFs have purchased 5 billion, and this is just 6 days in November since the election. And since that time, it's really gone up even higher than this. So you've got ETFs and companies who own ETFs buying Bitcoin daily. Corporations, miners, crypto exchanges, MicroStrategy, Tesla, SpaceX, Block, Mara, just a lot more companies are buying Bitcoin. Governments, okay, the US has 208,000 Bitcoins. China has 190. Bhutan, El Salvador runs on Bitcoin. They use it as a currency. The UK has Bitcoin. So you're seeing governments do that. We're talking now about a sovereign or a reserve Bitcoin fund in the United States. You're seeing other countries talk about doing the same thing. Within our country and within other countries, you're seeing states, 7 states in the United States, thinking about buying Bitcoin and putting it in a strategic reserve. You're seeing municipalities, I think Vancouver just passed an ordinance that they can buy Bitcoin. You're seeing companies like Microsoft just said no, but you saw Amazon today is going to put that up to a vote for Amazon shareholders to see if they want to store Bitcoin in their treasuries. So there's just been an explosive growth. And then, of course, we had the election, and Trump was at first not a fan of Bitcoin, which seems to be what everybody is. I wasn't a fan of it. Michael Saylor wasn't a fan of it. Jamie Dimon wasn't a fan of it. Larry Fink wasn't a fan of it. We're getting down to a point where there's less non-fans. I think Warren Buffett will be the last holdout, and I think he'll take that to his grave, but we'll see what happens after he's gone. But with Trump coming in and putting people in who are pro-Bitcoin, including his vice president, his treasury secretary, the SEC commissioner, plus a lot of the Congress and Senate came in were pro-Bitcoin, you're going to see an end to the war on crypto. You're going to see a digital assets framework put in place, accelerated institutional adoption now that governments are going to help regulate it better and not go after the industry, more favorable tax laws, and then again, the strategic Bitcoin reserve, where there's a bill in the Senate out there to acquire 1 million Bitcoins for the United States Strategic Bitcoin Reserve. So again, more demand. So when we go back and we look at where we are today with the global total asset value at 900 thousand or 900 trillion, sorry, thousand. This is where at least Michael Saylor thinks that the global asset value will be 404 trillion, or is that more than trillion, quadrillion? But Bitcoin is going to go up to 280 trillion from the 2 trillion we're at right now as an asset class. And so when you think about that, and you think about, okay, if I own some of this, even if it's a tenth of a Bitcoin at 2% of the total asset class, and in 2045, it's now my tenth of a Bitcoin is now 280 trillion of an asset class, and I own a tenth of one of those. You can do the math and figure out what you think that might be worth. Again, this is all speculation, but Bitcoin is made up of math and made up of logarithms and things that can make sense to engineers, and that's kind of what it got into me. This is Michael Saylor's forecast from 2024 to 2025. It was 65K back there. Now we're at 95K. But in 2045, his bear case is that each Bitcoin will be worth 3 million. His base case is 13 million, and his bull case is 49 million. Okay. So that's the main one that you want to look at. Here's your market caps. But and he has a model. It's called Bitcoin 24 model, and you can go Google that and actually calculate what you think. You can put in your own basic numbers. So this was always interesting. When I talk to people, this is the intellectual perspective of Bitcoin. At first, and I went through all these myself, you're a denier. You're like, oh, this is nothing. I sat next to a guy last night. I went and had a pint of good old brew, and guy next to me, I've known for a while, just as a somebody I just see in the pub once in a while. We got to talking about Bitcoin, and he's like, no, I don't believe in it, blah, blah, blah. And we talked for about an hour. And by the time we were done, he said, I'd like to talk a little more about this with you, because we basically went through everything we just went through. And he says, because, if it's only like 1 or 2%, why wouldn't I want to be in something like that? How would you get in and blah, blah, blah. I said, okay, I'll talk to you. Skeptic, okay, a little bit skeptical. And then as you get more up to date on it, you'll start trading it. Maybe you'll trade the ETF, or maybe you'll trade MicroStrategy, or one of the Bitcoin equities. Then you become an investor, and this is the level I think I'm at, because I don't sell any of my Bitcoin. I just hodl it, and I will dollar cost average in. And then you got people like Michael Saylor, and some of these kids that got into it earlier, they're maximalists. Everything they own is in it, and I don't condone that. Okay, for myself, I'm not going to do that, but I don't think you need to be all in. But these people are really into their beliefs, and they've got themselves convinced that being a maximalist is going to be their best way for generational wealth. I think you can do it with a percentage of your portfolio, and we're just getting started as far as what I see based on what I've studied of where Bitcoin price could go over time. So even Michael Saylor, okay, everyone is against Bitcoin before they're for it. And this was Michael Saylor's tweet in December of 2013. He said, Bitcoin days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. And he wrote that in 2013. And then he reassessed his look on it in 2020. He started buying, and now his company and himself own more Bitcoin than any entity right now in the world. So again, I just wanted to kind of go through an overview to start this out, so that everyone's kind of on a baseline, at least from my thought process of what Bitcoin is to me and why I invest in it. Okay. But the next question is, okay, where does it come from, and what's a miner? And I'm going to turn it over to Trent, and then after that we can have questions or just talk, open discussion, because mining is something that's confusing to people too. And I got into discussion with that gentleman last night about mining, and I'm not as good of an explainer about mining as Trent is. So I should have pulled my card and called a friend or whatever they do on that. So anyway, go ahead,
Well,
Trent.
so I got interested in Bitcoin probably around 2020, And I sold a business in 21 and took a portion of that and bought 6 Bitcoin miners because my CPA said I could write them off against my tax bill in that year. And I had a big tax bill because I got a down payment. And my brother-in-law, who was mining, he and I got to talking about it. And he's like, "Yeah, if you buy miners, I'll host them for you or house them for you." And yeah, this is great. And so I started with 6 miners, and really just all of a sudden, I would look at my account every day, and I would see I got fractional shares of Bitcoin each day from each miner, and it started adding up. And this was during the period of time when Bitcoin was on this raging bull run, and mining was became very, very profitable. And what mining is, and I'm going to show you a chart, is here, bear with me. Can you all see this? You all see that? So what mining is it is the process of verifying a Bitcoin transaction. So I'm going to use this example of Alice. And Alice is going to buy a product from Bob here, and he wants to be paid in Bitcoin. So Alice gets his Bitcoin is a very private uh, asset. You have private keys that are associated with each Bitcoin you have, or the fractional shares that you have. And if you lose those keys, you lose your access to Bitcoin. And that's one of the tricky things when it comes to actually having holding Bitcoin outright. And so she uses her private keys and signs a message with the amount of Bitcoin that uh, amount of Bitcoin that Bob is requesting for the product. And then Bob gives her an address where she can electronically transfer that money to, and that is called a transaction. Now, that transaction is then moved into a block, and that's what makes up the blockchain. And a block is a grouping of transactions that are put together, and every 10 minutes a new block is created. But that block has to be verified. And so the block is broadcasted to all the mining nodes, which is, I had 6 miners. They're little computers that solve a algorithm or a mathematical equation. And so there's an algorithm programmed into each miner. They're about the miners I have are probably about 12 inches tall and about 6 inches wide, and they make an enormous amount of noise. And they're hooked up to the internet and plugged into the electricity. And so when the block is issued to be verified, my miner goes to work. And it goes to work by solving a mathematical equation. Now, this is a game of speed. The first person who solves um, that block is then awarded a fractional share of Bitcoin. And so you have this network of nodes, miners, that validate Alice's transaction using an algorithm in a process called mining. And that is what mining is. It's when somebody has a mining farm, like say Marathon or Iran, IREN is the symbol. They have these gigantic farms of miners, and these miners are verifying Allison type transactions. And so once a transaction is verified and the block is verified, the block goes into the blockchain. And understand, this is a ledger system, and there's thousands upon thousands of computers that hold the ledger. Why blockchain is so secure is because everybody who is on that ledger system or holds a ledger each one of them has a copy of the same ledger. So if you were to go in and make a change in a transaction, you would have to change all the ledgers in the world, which makes it virtually impossible to ever do. And that's why blockchain technology is actually being adopted by a lot of banking systems. I know American Express early on bought Ripple, which is a cryptocurrency, a blockchain technology. So once a block is verified, my miner wins that race to verify that transaction or that grouping of transactions. My miners get awarded a fractional share of Bitcoin. Now, once that's verified, the transaction is complete and a new block is added to the chain. So imagine this isn't just a real slow process. This is a really there's a lot of miners out there doing the same thing and they're all in a race to verify a block so they can get rewarded that Bitcoin or fractional share of Bitcoin. The block is permanent and cannot be modified. Bob receives his Bitcoin from Alice, and the transaction is done, and the process starts over and over again. The thing about mining is there's a lot of talk about energy costs. So we're running. So I was running 6 miners. My brother-in-law, I think, had 20, and then we had a couple other guys in the same facility, and they each had about 10 to 20. So we had a lot of miners. That takes a lot of energy, and there's a cost to that. So when you mine, you get your Bitcoin. Say if you look at a P&L on a mining standpoint, you get your gross amount of Bitcoin, and then you start subtracting your costs, your energy costs, your electricity costs. You got to keep the place cool, so you're running big AC units, big systems. Bitcoin mining is very big in Wyoming. One, they have natural gas, so they can use the gas to generate energy, but it's also chilly. Montana is a big area, South Dakota. A lot of the northern states have a lot of miners, and it's the reason is to reduce that energy cost. So when you come out after expenses and everything, sometimes in those years where you saw it was down, 57%, 74%, you see a lot of miners will shut their miners off because it's not cost efficient. Others will just run through it because they have a cost balance system going on to do it. But the most unpopular points in mining are when the Bitcoin is down versus when Bitcoin is all in the hype and all in the headlines. That's when Bitcoin is pays out bigger and pays off bigger. And so I've recently mine have been down for about a couple months because of a facility reorganization going on, but my biggest years were at the prior to what was it, 21 was a humongous year. My payouts were insane. And then when Bitcoin crumbled, I believe that was 22, if I remember right. My I was getting maybe 25% of what I was getting paid the previous year. So it fluctuates and it becomes a cost management system. But recently, this past April, we had what is called a halving. And so when Satoshi Nakamoto wrote this paper, he said, okay, I'm going to have 21,000 Bitcoin out there. And in the beginning, think of it as this as a reversed pyramid, a funnel. In the beginning, there were a lot of Bitcoin that were being mined. So thousands of Bitcoin in a 4 year period were being mined each day. And every 4 years, that number that were being mined gets cut in half. So this past year or this year in April, we had 900 Bitcoin were being mined every day. After the halving, it became 450. Okay. Every 4 years, like presidential cycle, you see this halving happen. In 2028, you'll have another one, and there'll only be 225 Bitcoin mined each day. What does this do to supply? It shrinks the supply, which then forces the availability of Bitcoin available to for you and I to buy starts to shrink. The majority of Bitcoin is never actually ever, once it's been bought, has never been sold. I believe it's 13 million or so have never been sold from its original purchase. They're actually not even on the network. They do a thing called cold storage. That's where you download your keys, you take it off, say Coinbase or Binance or any of these other ones, and you take it off and you put it on a USB drive or a what they call a wallet, and it's a secured wallet. So they take it off the network and they put it in a safe or they put it in a landfill, like that guy in Britain did, or his girlfriend did. And until it's brought back onto the network, there's no access to it. So of the 19 million being that have been mined, or 94% have been mined, roughly what's that, 6 million have are only available to transact. So when Michael Saylor goes out and spends $4.8 billion this past month and buys 4.8 billion in Bitcoin, he's taking a chunk of Bitcoin that's available on the market off the market, and that shrinks that supply. And as we get further and further to that last mining, the last Bitcoin being mined, which is 2048, that's a long time from now, you're going to see the supply shrink. And I think with with countries like El Salvador, China, us, I believe, the United States, states like Pennsylvania who are talking about adopting or buying 700 million of it. I think you're going to see those guys are going to be buying big chunks of this. Corporations who, if they adopt this, we're seeing a lot of small companies do it. They're going to buy it and they're going to hold it. And if we see a bigger rush into Bitcoin and this hodling or maximalist kind of approach, you're going to see less and less Bitcoin. So if that, say, 450 that were mined today, if half of them come off the market and are held, that leaves only 225 Bitcoin available for you and I to trade, to buy. And I think this is where Michael Saylor gets his $208 trillion market cap on Bitcoin, is because the more and more people understand how this can balance out your portfolio and get you over that was a monetary inflation rate of roughly 16%, you're going to see more and more people hold it. I look at this and I have friends who have it. They've never sold a Bitcoin. I have friends who have mined Bitcoin. They've never sold one. I have no idea how much they got, but I gotta believe they can buy a beach house down the road from me for a lot of money. So when I look at this, I think to myself, the whole supply and demand element. The one thing I love about it is, one, it's mathematics. There's a limited supply, and there is no human altering of what it is. There is no human being who can go in and alter the code or issue more Bitcoin. There's no diluting of it. And I think in a system, and this is interesting, I spent 22 years as a financial advisor. And I gotta say, I really never thought about the printing of money all that much until here in the last probably 4 years. And what that says to me is, if we continue to print money as a country, if that policy stayed in place, you and I, as investors, as people who are getting older and getting towards retirement, we have to outrun that inflation element. And that's where I think active management of our investments, but buying assets that have a limited supply, a limited availability, and who are in assets that are going to be held, not traded, are going to drive the value and balance out our overall investment portfolios. Now, one of the biggest questions I get is how much, and I know Mark gets it probably every Friday, how much should I hold of this? Presently, from a governmental regulation standpoint, this is where the crypto world is begging for this to be have rules surrounded by it. They want to understand what they can and cannot do, just like a stock or a bond or a commodity. There are rules for which you can transact, for rules you can do with creating. And the crypto world has been begging for this set of rules. Presently, crypto or Bitcoin and cryptocurrency is regulated by the Commodities Future Trading Commission. So it is deemed Bitcoin is deemed not a currency, but a commodity. Now, if you look at it from an investment standpoint, how much would you hold in commodities in your portfolio? It is suggested that no more than 5% in commodities should make up your overall portfolio. So when you decide if this is a route you want to go, or if you're in this and you're not a maximalist, but you're more of an investor, you're trying to keep pace with outpace inflation, you're trying to create balance and less volatility in your portfolio, consider the commodities commission or commodities future trading commission suggests no more than 5% of your overall assets in commodities. And until Bitcoin becomes regulated by the SEC, which with this new presidential administration, that could happen, that would be a guideline to consider when investing. Because as you see, it is super volatile. A week ago, it was 103,000 a coin. Today, I think it's down around, I think it got down towards 93,000. So it dropped. It is very volatile, and that's something to take into account. So if you're truly a maximalist, you understand the risk, you understand one day you could be up and the next day you could be on the floor. But if you're an investor who's considering this as a something to add into the portfolio to even out the risk, take a look at Bitcoin and look at it as from as a holding. It's a store of value. It's like holding gold in a sense. It's our modern day version of gold, in my opinion.
Digital. Yeah.
Digital gold. Yeah.
I don't think, for me personally, I don't think the SEC will ever regulate Bitcoin as a commodity because um, it's not really a security. And Securities Exchange Commission, they regulate securities. They can't. The problem they have is they can't go and look at a balance sheet. They can't go and look at the structure of the company. So it's like gold.
Right.
They can't regulate gold per se. Which is why it's a
Yeah.
commodity. So that's just my feel on it. And who
Yeah.
knows? Who knows?
We don't. And I think with this new administration coming in, there's a lot of progressive um, people who are being elected to different areas. I know David Sachs, who has been put on or elected to be head of basically digital currency in a sense, or digital crypto and that kind of thing. He is very pro. He is one of the players who founded PayPal, so he's very technology oriented. The SEC chairman who's been elected is more favorable towards or Bitcoin crypto versus the existing SEC chairman, who basically just went out to sue everybody they could and related to it. So I think I'm hoping there becomes a little bit more from a governmental regulation standpoint, more
Defined.
basically making it legit in a sense and creating guidelines. And so that's where I hope the SEC would step in and help make that happen. And I think the crypto world wants that to happen. So, um, it's sort of like the internet. I remember sitting in a, a computer class in 1990, and this professor brought us over and said, check this out. And he logged on to the internet via Mosaic. And he said, this is the future. And half the class laughed at him and half the class paid attention. And I think that's where we're at. It's just accelerating faster than the internet adoption did. So yeah, that's mining in a sense. Jason, did you have a question?
Actually, I have three, but do you want me to wait till the end or?
No, go ahead. Go ahead.
All right.
No,
Well, my first question
That's
is
pretty much there.
that's the end of our
okay.
presentation for
Okay.
today. Thank you and good night.
I appreciate the presentation too. I definitely learned some stuff. So first question, when I buy through, say, Fidelity and I'm cost averaging in, do I actually own anything? Like, can I say, hey, I need to take it out and put it somewhere? Or is it just like a stock where I'm just watching it go up and down, and then the day I pull out, I just get those funds?
Well, let me ask you a question. Do you have a Fidelity crypto account in your Fidelity system?
Yes.
Okay, so those you cannot take custody of at the moment. Okay, so that is just like owning a share of a stock or a share of a coin. Okay, now hopefully with the new administration, one of the things they're talking about is changing the rules so that if you own it in a Fidelity crypto account like that, uh, you can, when you sell it, they can transfer it to your other brokerage or your cold storage or however you want to do it. But right now you cannot. Okay, not on
Okay.
Fidelity. Now on Coinbase you can. Okay,
Oh,
so Coinbase, you hold raw Bitcoin in your account, and if you want, you can transfer it to another uh, broker, or you can take it on your cold storage and take it out and take it to Bermuda with you. You know.
so I guess that would be the benefit, since I'm going to be running from the law soon, um, to
No, I
go
don't.
to like a
Let's
Coinbase
just,
spot.
yeah. Let's just. I have both. Okay, I'm trying everything just to make
I was
sure I
joking
try
about
to
that.
understand it. So I have the reason I have it in Fidelity crypto is it's easy. Okay, when Coinbase first came out, and Trent, you can chime in on this. It wasn't that easy. Okay, and they didn't have the documentation for taxes and lots that you buy and all that. You had to kind of manually do it yourself. Um, so with Fidelity and those types, they have it all built into their system. You can get a statement and this and that. But for Fidelity, the only reason I see that it would be different than Coinbase, being that I can't take it out, is if everything collapsed and I needed to take it out. So I'm not thinking that everything's going to collapse, you know. Um, so I'm just using it to store value there where I could sell it. Now, my Coinbase account, I'll probably never sell any of that, and probably not my Fidelity either. But you never know. You want to take a vacation, you got a bunch in there that you've made. Why not? So I would not sell my raw Bitcoin, but I would sell my Bitcoin that's sitting in Fidelity.
Okay,
So
gotcha.
I
Yeah.
have a Bitcoin and I mean Coinbase, and I've had a Binance account as well. Coinbase has really upped their game. You can get you can you can
Yeah.
get your tax reporting, cost basis. It tracks all that now. So they've upped their game in a lot of ways. I know Coinbase made a big effort to be on the good side of the US government versus Binance, who ran into some issues. And so when I look at these different exchanges, Coinbase is probably the more trusted because they've been forth, up front with the government, how they're doing things. They've brought the government in as well. I believe it's was it Horowitz Andreas is the private equity fund who is invested in there. They brought in and actually a one of the top California um, prosecutors on digital currency and brought them into their firm. And they have laid down a lot of guidelines in helping Coinbase as well as a couple other crypto currency companies to really get on the good, on the right side of this fence when it comes to good and bad when it comes to crypto. So I think I have more confidence in Coinbase than I would Binance. So there's a lot of issues with Binance from my perspective, but I think Coinbase it's got its foot in the door with US government, and that to create ease, I think that is something they have to consider. So, what was your other question, Jason?
Jason, you got two more, and then we got a couple more hands with Jason. Go ahead and finish out your
All right,
next two.
all right. Thanks, guys. So what happens to the miners once all 21,000 Bitcoins are mined?
I knew that question was coming up, and I actually
Nice.
warned you, didn't I, Trent?
It's something similar to that. has happened with Ethereum about a year and a half ago, I think it was. It basically becomes a verification or of transactions on the Ethereum network, I believe is how it's done, and it doesn't pay as well. So what I see happening on the Bitcoin side when it comes to mining is one, your miners last about 3 years, so they start to burn out. I think as it gets harder and harder to mine, you're going to see a rotation, as you've seen a lot of mining companies are rotating to the uh, the data. Uh, I'm loss of words here. The
Like data
whole
storage.
Data storage, data systems.
data system. So, like for instance, the um, company out of Australia, Iron, um, they have converted from a Bitcoin mining company to, oh, now they are a data center, and they're supplying data because they have these servers and they have the infrastructure. It's an easy conversion. So I think you're going to see, as we see AI revolution continue to run rampant for a while longer, I think you're going to see a lot of these mining companies convert over a part of their business to stay alive because they know it's going to. I mean, when you're only mining 450 Bitcoin a day, and that's going to get cut in half in 2020 to 225, it's going to get harder and harder, and the cost related to that's going to go up. So you got to diversify your business. So I see it just eventually there'll only be a handful of companies and individuals mining as you get closer to 2048.
So I've been researching Ethereum also, and it seems like they're a lot more into that storage, the data storage for like mortgages, and is that what you're talking about? But yet they
Well,
have a
no,
coin.
their mining process changed from the reward system that Bitcoin is on to basically a stable coin system. It doesn't pay well. I know the guys that I'm associated with, a lot of them converted their miners over to other types of cryptocurrency because it didn't pay out anymore. And so it didn't outweigh the cost of running their machine. So they went to, some of these meme coins, or they're mining, different other ones as that are mineable. Um, so
But the Ethereum's different because it, potentially Ethereum could have a limited number of Ethereum, right? Compared to only 21 million Bitcoin.
right. Yeah.
Oh yeah.
What Ethereum and Solana and Polkadot and all of these type of coins that are very popular is there's a utility to them versus what Bitcoin is. Solano is a payment system, payment processing system. In the old days, I'd go to Western Union, I'd wire money from here to say Singapore, and it would take maybe 2, 3 days. What these guys are developing is a system where you can be in Singapore, I can be here, I can wire you $1,000 and you have it in a Solano token that you then convert to a US dollar, and you get it within a minute. The Bitcoin system is a 10-minute transaction system. So if I sent you say $1,000 in Bitcoin, you would receive it in 10 minutes from now. With Solano, Ethereum, and all these, their systems are faster, and that was sort of the revolution of Bitcoin blockchain, was to use this technology. But how do I make this money transaction faster, and how can I send you $1,000 instantaneously? And so that's what you're seeing happening, and that's where a lot of these other cryptocurrencies, they're not about being a currency. It's a bad word for them. It's a utility. And so if you're building some sort of payment system or a mortgage system or a law, contracts or something like that, and you need a place to store it or need a way to transfer it in a secure way, the blockchain is what it is. And so that's what you're seeing being developed with a lot of those companies. I know Solano is a big leader in that payment processing element. Um, And so, yeah, that's the sort of the difference right now. Bitcoin is just a store of value. It's the begin. It was the first blockchain. So
It's digital
everything from
capital.
there is faster now. Yeah.
Gotcha. Thanks, guys. Appreciate it.
Is
Yeah.
that it?
That was it.
Okay.
Hey, Troy.
Uh,
Troy, you
Srini?
had your hand up?
Yeah, thank you. One question, quick question. I don't take much time here. Yeah, Mark, you're talking about the Fidelity account having the Bitcoin, I mean, sorry, the crypto account. So you need to open it by calling them because I have a Fidelity account, my 401k, but I didn't see any crypto option there. So is it something you have to call them and open it, or like how that works?
Is that on Fidelity?
Yeah.
Yeah, Fidelity, there should be a button in there or a section that trade crypto, and then it'll make you open an account, a separate account called Fidelity Crypto. And then
Mhm.
you can transfer money between your accounts in Fidelity or bank into that account. So I'd have to go look at that and see how that works. But anyone else, because a lot of you guys have that, right? Fidelity Crypto, at least some of you have it.
Oh,
Yeah,
that's only
I
for
just opened mine
trading?
last week.
And I think, go ahead. Someone just opened theirs.
Yeah, I just opened mine last week, Mark, and you're right. There's a button on there now that says look into crypto, and then you can open a crypto account, and it explains what you need to do and how to do it. You just can't transfer money straight in, so you have to have an original account. But
Okay,
yeah,
that's
there's a
good.
button there now to open a crypto account.
Is it on the front page or where's it at? Do you remember?
No, it wasn't hard to find because I'm not computer literate at all.
Oh, no
I would,
problem. I can check it out,
yeah,
but it's off.
yeah,
Okay.
yeah. Take a look at and see if you can find that button. If not, call their customer service. And they've always been good to
Yeah.
me. They'll walk
Yeah.
you right through it.
Right.
One
And one
one
more
other
question.
thing,
Okay. Yeah, go ahead, Trent.
you mentioned something about 401ks.
Mm-hmm.
I don't believe 401ks can hold
Raw,
Bitcoin,
raw Bitcoin.
raw Bitcoin. And so if that was a route you were trying to go, that
No,
may
no, no.
be.
Yeah, no, that's not my apps. What I'm trying to say is I have all in one account, right? I have trading account in Fidelity, my 401k in Fidelity. So yeah, I don't know that. And also one question on the same lines. So that is only trading, right? But you can't buy or sell. I mean, of course, yeah. So you can also hold the crypto account. I mean, currencies there, right? Like Bitcoin, you can hold there, or Ethereum, whatever you can hold there, right? In that account.
You can hold,
Yeah.
you can buy Bitcoin in the Fidelity account, the Fidelity crypto account,
Okay.
but you can only sell it. You can't at the moment, you can't transfer it into another exchange or into
Oh, so you
a
can.
cold wallet. If you want to do that, you probably have to go the Coinbase way.
Gotcha. Gotcha. It's only
Yeah.
for trading, but it's not for transferring in and out of
That's
the.
it. And then they might change the law over the next 4 years. They're talking about a lot of things they want to make easier, and that's one of
Okay.
them. So hopefully they'll change it. Like in Hong Kong, you can actually, in an account like that, you can actually take it out, any brokerage account in Hong Kong, from what my understanding is. And I think we'll probably get to that point here.
Okay. And Mark, one question. I mean, so how long you been trading crypto? I know like there are a lot of people trading for a long time.
Uh,
But
I've been accumulating since 2020. I've never really traded it. I've never sold it.
okay.
That's Bitcoin. In
Yeah,
fact,
some people, yeah,
I have I have some Ethereum and stuff I got earlier. I've
yeah,
never sold that either.
yeah. But some people even trade. I mean, not I'm saying trading, but this is day trading also. Like what the people do in stocks, like I know like there are some people they do trading also in crypto, like in Coinbase or some other.
Oh, absolutely. It can be traded, and a lot of people do. I just choose not to. Tax wise, if because it's not in a tax protected account, the raw
Mhm.
Bitcoin, or even in Fidelity, you're going to get hit by taxes by trading in and out of it a lot. So
Yeah. Thank you.
okay, Scott,
I think Troy had his hand up.
and then we'll go. Was it Scott or Troy?
Troy
Anyway,
was
let's
first.
Scott. We'll go Scott, and then we'll go to Troy. Is that okay? Scott, there you go.
Let's start for a question. Have any analysts called here and heard of something called BDS? Yes, IES. Yes. for investing.
Your microphone is real gobbly. I didn't understand what you said.
Now I can't hear him at all now, but can you put it in the chat and we'll read it?
Yeah.
Let's do that, and then we'll go to Troy while you're typing in the chat.
Okay,
Hi, Troy. How you doing?
I had a couple questions. One thing that has always concerned me with Bitcoin is the volatility. And I've noticed it seems to, when we see dips in the S&P and the general market, Bitcoin seems to take a dip with it. So the way I see it, we kind of have multi-layered volatility. Like we have global interests that can vary up and down. You know, governments can decide they're either going to adopt it or not. But then we also have the fund managers, like you were saying, these ETFs are starting to buy into it. And it's kind of obvious to me, and I'd like for you guys to speak on this, is that these algorithms on Wall Street seem to beat us every time. So if you're a buy and hold guy, that's great. But the problem is not everybody's buying and holding, obviously, because if they were, Bitcoin would not be tracking with the market. One thing that I've always been attracted to when I look at other assets like this, I mean, I like the fact that there's only a certain amount of them, but there were only a certain amount of Cabbage Patch dolls, you know, and popularity wore off, right? Nobody gives a damn about a Cabbage Patch doll anymore. So between the volatility and the fact that right now we're riding a wave that one man said we're going to be the Bitcoin capital of the world, and everybody likes it. And my concern is, you know, if we're going to be a buy and hold forever, do y'all see maybe a point where popularity just wears off and it gets stagnant? And if you don't see that, can you explain to me? I'm not really deep into the mechanics of it, and I would like to be enlightened to say, okay, well, here's why popularity is not an issue with this asset, and then also maybe shed some light on this volatility, this multi-layered volatility that I'm talking about. That, you know, am I imagining this? Because if you track Bitcoin prices with the stock market, and if y'all want to bring up some charts to show that, they do track together. When there's a sell-off at Wall Street, Bitcoin takes a dip, and it always seems to take a deeper dip than the market. So, man, I do hold MicroStrategy. I'm very attracted to the coin. I would like to get a little deeper in. I'm at that. I'm not at the denier stage anymore. You know,
Yeah.
Mark, you're part of the attraction. I mean, I like it, and I think you've done a great job explaining this, both of you guys. But those are my concerns, and I'd love to hear y'all speak on it.
So let me address the correlation to the S&P. Right today, Bitcoin is 88% correlated to the US dollar. It is, when you're right, when the S&P goes up, it's been one of those that goes up. When it goes down, it goes down. And I think that has a lot to do right now with it's always been sold as this is a non-correlated asset to equities or anything. And the answer is no. It's correlated in some form or fashion. It's highly volatile because it's highly leveraged. And so when you have institutions who have high frequency trading capabilities, this is a prime asset to go after when markets take off, like we saw after the election. They're jumping in on this as they are jumping in on the S&P 500 and the Mag 7 and all these other things. is it an asset class, or is it an asset that can decouple eventually? I think as more and more of it is mined and more of it becomes available and more of it becomes held as an investor or a maximalist approach, you'll see the volatility sort of level off, as you've seen with gold over the last 100 years. Right now, it is a highly leveraged asset that's in the news and being pushed around quite a bit. So as an investor, how do you approach this? How do you allocate to this? And that's where I go back to that whole that quilt chart. If you're putting 50% of your assets in Bitcoin, expect you get your face ripped off at some point in the next couple of years. It every 4 years it takes a dive, right? On the flip side, if you're allocating for a long-term portfolio and you're allocating 4% of that, there is another asset class that will balance that out, such as bonds, real estate, when Bitcoin has a bad year. So it it is heavily correlated at this point, but will it become less correlated? I suspect so, as more and more um, as less and less liquidity becomes available as people buy it. If we see states, 7 states in the United States adopt it and buy 700, $1 billion worth of it each, and they just hold it, that means that comes off the market. So there's less to be traded, and eventually, in my opinion, there will be less and less traded, which sucks the liquidity or the volatility out of the asset. But today, yeah. I mean, it moved $10,000 in the last, what, 5 days? I mean,
Yeah, but 10,000 on $100,000 asset, that's 10%. You can see
yeah,
Nvidia,
but
SMCI dropped 37%, because
well,
of a
I mean,
news.
but okay, I mean, compare that to another commodity-based asset like Exxon. What's its standard deviation? I guess it's one of those things. I look at it and I go, if Michael Saylor is anywhere near right about its market cap of 280 trillion, that's 155 times what it is today. So if you bought $1,000 of that and it gets to $280 trillion market cap, that means your $1,000 is worth what, $155,000? Well, it ain't all that bad of a day. I'll
Yeah.
take that. But I really think this is one of those things is, one, spend the time understanding what this is, why it was created, and what the purpose of it is. And two, be realistic about how much you own of it in relation to your risk tolerance. The day you decide not to work, a lot of people think about retirement, right? If you're rolling the dice with 100% of your assets and you're 55 years old, you may not retire at 65 because of the whiplash of it. But if it is a way to balance out your portfolio and balance out the risk and capitalize on a rare asset, I think that's a better way to approach it.
I think I agree with a lot of what Trent said about, especially the volatility. I mean, when it hit 100,000, it's been a long time coming for 100,000, and 10,000 was a big deal, and 50,000 was a big deal, but 100 was a big deal. And when it hit that and broke through, I mean, we're at 96.5 right now, approximately. That broke through a wall, and it also freed up. I don't know if you look at, you can go to BitBull or Coinbase, and you can see the wall, the buy wall and the sell wall. Okay. The buy wall was like this and the sell wall was like that. It was huge. So there were a lot of, I don't know if they were just traders or longtime investors who, got in it. They got 5,000 coins at, at $10 a piece. It said, shoot, at 100,000, I'm going to, enjoy a little life, not sell it all, but sell it. And it took a week or two for that sell wall to get down and for it to break through into the hundreds. But it's like you said, Trent, there's so many wallets and addresses who have never sold. I've never sold. Yeah, not that I'm a whale, which I'm not, but I've never sold, and people who actually get into it and see it as a store of value never sell.
Do you
Now,
need help?
the way to sell it, or is that someone talking? No.
I don't think.
So the way I look at it and the way I'm looking at the future is that once we get up and there's hardly any left, or there's some trading, there'll always be some trading, you know, that at some point you're going to be able to leverage out and borrow out against your Bitcoin. So instead of buying a house, you know, and by selling your Bitcoin, you're going to be able to borrow out $250,000 with your Bitcoin, like you can with Berkshire Hathaway stock right now. I have friends who would do that. Okay, they'll borrow, and that's their collateral, is their Berkshire Hathaway stock. I think you're going to be able to do the same thing with Bitcoin, and I think that's me long term. So the fact that I just want to keep it as a store of value is the same way I want to keep my Berkshire Hathaway stock as a store of value. You know, I just see it as being there as something that is valuable, will always be valuable. You're going to have popularity where money will rush to where the money's rushing to, okay? And then it's going to rush somewhere else. It's going to rush here. But over time, when I look at Bitcoin and I understand it the way that I understand it, I want to be in it and I don't want to be out of it. So if it goes up, it goes up, it goes down, it goes down. But I have, you know, I see that in Berkshire Hathaway. I see that in stocks. Okay. And I see that, you know, it's appreciated over the last 4 years, 60% a year. Why wouldn't I want part of that? Why wouldn't I want to be in it?
Yeah.
Okay.
For the guys that are interested in getting in now or purchasing additional, do you feel like we're a little bit late to the game right now? Or no, I shouldn't say that. I know we're not late to the game just looking at the charts, but would this be a bad time just because of the sentiment? Or do you think the sentiment's going to continue to grow into 2025 and Trump's going to carry us through, make us the.
I honestly think this is where your investment process comes into play. If you're running a Paul Tudor Jones approach of using the 200-day simple moving average as the point that you get out or you buy, you know, if it bounces off that and goes higher, this is where I think really truly having an investment process comes into play. I mean, if you look at a chart of Bitcoin, it's recently been going sideways and it's trading in a channel. So what is that? If from your understanding of investing, you start to look at enough charts, you start to see behavioral patterns. We're in the month of December as well. A lot of institutional investors are cleaning up their balance sheets at this time of year so they can look good going into next year. Because if you have great returns, you often get new assets. So this is one of those times a year where I look at it and I go, is this the best time? There'll probably be a better time, or it's a time to accumulate. And I think that's possibly more so as we enter a new administration, a new a more favorable environment for crypto in general. And we may be seeing an opportunity to accumulate like a big institution does, and then move higher as we go into the first part of the year. But I think if you're a buy and hold and this is an investment, you're wanting to accumulate, say, 4 or 5% for your portfolio, you start dipping your toes in it. You start buying on the dips and you accumulate with the idea that you're going to hold it. It's not a traded asset. It's going to hold it and it's going to help balance out those rough years on some of the other asset classes. That's how I would look at it.
I see it. There's a saying in the Bitcoin world, and I'm way older than the average Bitcoin person.
Oh,
But
come on.
when's the best time to buy Bitcoin? The first time you hear it about it. When's the second best time to buy Bitcoin? Today. Okay, and that's what they say. I I I buy every month. Okay, I dollar cost average. I buy every month. I don't look at it. It's an investment for me. It's a long term for me, and this is only me doing this 40 years. I've never had a financial advisor. I've always done my own. This for me represents an opportunity that I haven't seen for creating generational wealth. And it goes back to what we talked about, supply and demand. There's only so much supply. Okay. And I'm looking on the other side of what's happening, like we talked about with the new administration and how pro it is. Look what happened when it wasn't pro. Like for the last 4 years, it still grew. Okay. Think about what happens when you have a pro government behind it and one government that wants to use it as a reserve currency or a reserve store. Think about think about BlackRock and Larry Fink going, oh my God, I just, I didn't even believe in this stuff. And it became the most popular, fastest growing ETF in my BlackRock empire. Look at Kathy Woods. Look at the other 14 Bitcoin ETFs. Look at the ability now that you can trade options on that. You can trade futures on that. It's now becoming more standardized faster than I've ever seen it become standardized. And I think as that comes through, you're going to see the volatility come down again, like Trent said. It's still going to be volatile. But as more people understand it, more people get into it, and the scarcity of it, I think will bring the volatility to wherever that volatility is. Okay. People who don't trade it, who don't sell it, they're not going to care. They really aren't. Okay. I told the story, and for those of you who weren't here, we talked about this months ago, and I said I was talking to my group of friends that we meet every Wednesday, and I said, you guys should buy a tenth of a Bitcoin. This is when I was at $65,000 Bitcoin. I said a tenth will cost you $6,500. That's your drinking budget for a month. I know you guys, and some of them did, and and at that time it was going up and down, and it would go down to 52 and up to 70 and down to 52, and they kind of lost interest, and then when it hit, I said, well, just wait. I said, your $6,500, if it hits $100,000, it'll be $10,000. That's a pretty good return. And if it hits $1 million, that'll be $100,000 on your $6,500 investment. And, some people still think, analog and not digitally of my friends. And I could tell the ones that I went and I helped and they picked up whatever amount they wanted, they were comfortable with. But a week ago, when Scott texted out on the Discord that, it hit 100,000, we were sitting together, and I could tell the ones that did it, that went out and did the 6,500, because they were all smiling and they were ordering shots. And the other ones called me the next day and said, about this? Is it too late to get in? Can I still get in? And I spent a couple of days helping people figure out what they wanted to do in the world of Bitcoin. Okay. And these are guys my age. And I told them, what you don't want to do is, in 10 years, if we're sitting on Bora Bora for 6 months on our Bitcoin, funded by our Bitcoin gains, and you're not there, don't come to me and say, why didn't you tell me about this? Because I got it on tape, And so that's how I kind of look at it. What's the risk? What's the reward? I'm not putting, like Trent said, I'm not putting my entire life into it, but you don't have to gain a reward on this, in my opinion. I'm not, no financial information, or recommendations, but in my lifetime, I'm like, this is the one thing that, everyone's looking in the stock markets, for the Amazon. And for me, in this realm of assets, I think this could be the Amazon for me.
I saw this interview with Jeff Bezos last night, done by Andrew Ross Sorkin. And Andrew Ross Sorkin introduces Jeff Bezos as the man who changed everybody's life. And I never really comprehended how big Amazon has impacted my life from the standpoint of how I shop, how I surf the web, how I can go and create a business online and sell a product. He really has changed our lives. And I think every so often throughout time, history, there are these monumental moments. Henry Ford with the assembly line, the industrialization of our country, of the world, really. And then you have a moment in time where a guy or a thing or person, entity, whatever, writes a paper about a pure system of store of value, and that's the Bitcoin paper. What has come from that is the technology of blockchain and how that is revolutionizing how we do business every day, how we transact every day. The security element of our lives is becoming more and more at risk. And so when I look at Bitcoin, I look at it as one of those top 10 um, things, people, events that will change that have changed our world. Jeff Bezos being a big part of that, and Bitcoin and what crypto has evolved into. It's not about a currency. It's a terrible label it's been given. It's about a store of value in relation to Bitcoin, and it's a technology that is revolutionized our world. And I think we have to pay attention. We have to take a look. And like I think Michael Saylor has said, spend 100 hours studying this. If you don't feel secure about it, spend some time, read, watch videos, look at both sides of things. But I think what you'll come to is when you buy an asset or an investment, if I buy NVIDIA today, there's probably 100+ variables that can affect that stock price. When I look at Bitcoin at its purest form, there's only really whatever the market deems it to be its value. That's it. It's whatever you and I deem it to be value. I don't have a Jensen Young selling off his stock. I don't have, um, you know, a slow quarter in sales or revenue. Bitcoin is just the purest element. It's sort of like real estate. It's just pure. It is what it is. And I think that's how you have to approach it. And so, I don't know. I think it's one of those things that we'll look back 5, 10, 15 years from now and go, everything is built on what that paper originally mapped out. And we'll see our world change, hopefully for the better.
Yeah,
So,
great. Thanks, Trent. I'll just
yeah.
say the 9/11 crisis, I lost a good bit of money in the market. That turned me into a real estate investor. And I really think inflation is turning me into a Bitcoin investor right now. So,
Yeah.
yeah, man, I appreciate
I agree with that, Troy. That's my
Yeah.
my biggest thing is store value. Where can I where can I put my assets? What is the best asset classes for me to put my assets in and not lose it in for inflation, monetary or consumer inflation?
They
I I think Scott wrote a question. Anybody heard of a platform for Bitcoin US dollar trading called Moody's? Moody, yes.
I have
I
not.
haven't. You know,
No.
is
Hey,
that
David.
something?
Is there any difference if I buy $1,000 worth of iBet or I buy $1,000 worth of Bitcoin on Coinbase? Is the valuation the same?
You got
No.
NAV on iBit. You have management fees attached to that. So there's a level of it's like a mutual fund. If you buy a mutual fund, you have you're buying it at NAV, which means they tack on their fees for the convenience of providing you the ability to buy iBet. Whereas you buy Bitcoin, you pay a commission on Coinbase, and that's it. So
And I think,
there
and
is no ongoing annual fee associated with it.
I think iBet can be subjected to more trading based on logarithms and things that, a true Bitcoin buyer would not be probably in doing that. Now, I use iBit in my retirement accounts because I can't buy pure Bitcoin in my retirement account. So it's the next best thing. So I do own it. I own a lot of the asset classes that deal with Bitcoins, including MicroStrategy, which I got in a long time ago. And I own some of the ETFs that deal with covered call patterns that we talked about at that MSTY. I own that one. And if you go look at these things, make sure you read the prospectus, understand the risk involved, because there's risk involved in everything. And like Troy said, we're in a volatile asset right now, and not that the market can't be volatile. We could see the market drop. We have in '87 see the market drop, equities market 50%, in a day or two. So anything's possible. So, it's a risk, but it's something that is so different than anything that I have seen in my life, that it's a risk for me that I'm willing to put a bit of my portfolio into it, just like I do everything else. I own a lot of different assets. I own land. I own antique cars, farmland, real estate, Bitcoin.
Well, I hope your $280 trillion number comes correct, because I was just doing a calculation here, and that's $7,000 worth of today's Bitcoin would accumulate $1 million when you reach that 280 trillion number. So the question asked earlier tonight, is this a good time to invest? I would say that we need to, if you're serious, we need to invest now, because once they appoint somebody and they really get working with this coin could take off fast. And what I've noticed about Bitcoin, it may drift down, there's ups and downs with it, but when it runs fast. And this thing could be 150 in 2 weeks, with this much attention to it.
Yeah.
Seems to me like this is the first time that they've really put attention to it.
Go study it, because Bitcoin has cycles like winter and summer, spring and fall. And we're right now in what Raoul Pal calls a banana zone, where it's been compressed all summer, and now it's just going up like the banana. And you'll go back and you can look at, like I mentioned, the YouTuber named Plan B, and go see his stock to flow model, and watch Raoul Pal, and go look at any of the interviews that Michael Saylor has had. I try to put him on the Platinum Crypto channel. I just put one on he had with a couple of guys with CNBC. They did a podcast with him. I put on the one with Dave Portnoy. He actually went over and they did a 30-minute one. That's on the Discord too, under Platinum channel or Platinum Crypto. And just, that's how I did it. That's how I learned about it. Then I started reading about it. But and question what you hear, and investigate what you see. It's your money. Protect it like you own it, which you do, and invest if you want. Just like anything else, like NVIDIA, like Tesla. You do your due diligence, and and you ride the waves.
So John had a question: how safe is it to buy, as in hackers? So when you hear about people getting hacked when it comes to crypto, the majority of the time it has a lot to do with the brokerage company or account for which you have your asset in. When it comes to actual Bitcoin being hacked, it's never happened because of its blockchain technology. It's prevented. When it comes to being stolen, it typically, like Mount Gox was an issue. There was a handful of others. What, FTX, was it FTX? Am I pronouncing it right? That was an issue. That was a brokerage platform issue. And that's why I think that it's really important to understand the brokerage platform. Fidelity is a behemoth in asset management. It is a staple. Problem is you can't get it out. You can't put it on a cold storage. That's the drawback. Second step is Coinbase. Been around a long time. It's a US based company. They're fighting for regulation. They're fighting for all that. So I think and then you have Binance, which is another world. There's two levels of Binance. There's the outside the United States Binance, and there's the US version of Binance. So when you if you were to open a Binance account, you open a US version, and that gives the government the ability to track it. So um, I think that is still an area of concern in from my point of view. And that's why I moved everything I had with Binance over to Coinbase, and Coinbase has made it easy. They've made it holding assets there a lot easier. And since it's here at home in the United States, I feel a whole lot better about it. But if you're truly gonna buy it and hold it, taking it offline, putting it in cold storage in a wallet would be advisable, but also have a record of your keys so that if you move on from this world, your family members can get access to it. That is one concern I'm having right now of a gentleman that I know who has it. Uh, I hope that he has it all written down because if not, it's gone. um, but yeah, I think it's a lot more work from the standpoint of holding it versus holding a stock. But I think over time it'll get easier. But yeah, at the end of the day, it's like anything. Punch holes in it. I go off the movie World War Z, and Brad Pitt turns to the head of Israel during this zombie apocalypse, and he says, "How'd you guys know?" And he says, "I'm the 10th man." And what's the 10th man is when 9 people say yay, the 10th man is to take the opposite side. And I think that is with any investment. I think it's with AI. I think that's with anything. You have to take the 10th man approach and go, why am I wrong? Why am I wrong? And then go about proving yourself right. So, but hacker wise, I think it's a brokerage account issue. It's a platform issue. So go with companies that are reputable. Go with companies that I would prefer here in the United States that are regulated. I think that's a better route than going with, you know, what was that company out of China, Emoji or Mobo? You know, just stay away from that. So, um, all right, we're getting here at an hour and 40, almost 50 minutes. I am hungry, and I think we all are maybe a little bit. Um, if anybody have any last questions or anything? All right. So if you have found this useful, please let us know. We'd be we've talked about doing more things like this in the future. Not just Bitcoin, but other assets, other types of investments, that kind of thing. So let us know. Just hit the Discord or send me a text. I think most of you have my phone number probably. And you can get that on the website as well. And just text me and say, hey, I like this. I'd love to do a deep dive into another subject. We'd love to help you guys out on that. But in the meantime, thank you all so much for all your support and happy the rest of the week. We will have the 11:30 swing trading call on Friday and the 3 o'clock Kerry's call. Kerry, of course, will have a million things to say on Friday at 3. So should be interesting. He's had an eventful 24 hours, so he'll probably share it with y'all. So but anyways, have a great evening and thank you again. Y'all take care.